In Europe today, leaders are battling a situation of their own, though of a much different sort, you must say, than the devastation from the earthquake in Japan. Once again, the EU is trying to find a comprehensive solution to the sovereign debt crisis. Leaders are meeting in Brussels, and the clock is ticking. Julian Callow is back on the Inside Track from London this morning. He is the chief economist, European economist, at Barclays Capital. Julian, really, when you look at the European situation, is there any alternative to restructuring here? Is that what the leaders are ultimately going to have to accept? A haircut of some sort, an extension on maturities? What do you think?
Well, some people might have that view. I think from the perspective of the European politicians, that they'd rather at least address that risk if it materialises well into the future. Really what they want to do are three things. That they want to achieve much greater scrutiny of competitiveness, unit labour costs, current account imbalances, much greater scrutiny performed by the European Commission there. They want to achieve a stricter degree of fiscal surveillance and scrutiny there with semi-automatic sanctions. And thirdly, they want to agree on the terms of the European Stabilisation Mechanism, the permanent successor in Europe, to providing finance there. The danger is that what we're going to get is going to be quite soft, quite watered down, really, because when these countries come together, although the summits are focusing their minds, clearly, there were such differences of opinion across the countries on different issues like wage indexation and pensions and labour market flexibility, that it's really hard, I think, for them to sign up to a real strong agreement here that is going to be very exciting for the financial markets. So I think the best we have to hope for is that there are some breakthroughs, but we mustn't be prepared for anything too breathtaking, I would expect.
Okay, Julian, that does, of course, make sense based on everything that we've heard and seen from EU leaders in the past. If there is one signal that the EU could send to financial markets that would engender more investor confidence, what would it be?
I think it would be a sign of alignment, readiness to do all that it takes, increasing the size of the European facilities here, allowing countries to buy back their debt through additional borrowing there, and really signing up to very major economic reforms, particularly promoting labour market flexibility and mobility. And that last aspect is one I think is tending to get a little bit missed under the current negotiations as well. We had some news out of Portugal just today concerning yet more measures to try to reduce its budget deficit. But what we do need to see is a decent economic climate across Europe so that countries can really undertake what are some very drastic, radical degrees of fiscal restructuring over the course of this year.
Julian, thank you for joining us. Julian Callow, Chief European Economist at Barclays Capital, telling us that we are unlikely to see anything in the way of restructuring from this EU leaders meeting, more in the way of rearranging deck chairs on the Titanic.